So I just increased my position in Reklaim, and today we'll talk about the upside we can have in the stock. Now, I've already made some videos about this company, explaining what it does. So in case you don't know what Reklaim is about, I recommend you to start with this video. But in summary, Reklaim works as the Uber of private data. It is a marketplace where people like you and me can sell their personal data to companies that wish to stay compliant with the new privacy regulations that are emerging. With that said, today we'll talk about the stock's upside. And by the way, Reklaim is listed on the TSX Venture under the ticker MYID and on the OTC under MYIDF. But as I've written in this video's title, Reklaim can be indeed a 50x, as I will show you today. But that's why I decided to heavily increase my position, buying more than $2,000 worth of the stock this month. Because the upside here is just huge. Now, before we begin, as always, nothing in this video is investment advice, okay? So Reklaim's current market cap sits at 9 million Canadian, while its revenue over the last 12 months stands at 4.7 million. So in other words, this company is trading at about 2 times revenue only. For me, that's a very low multiple to pay for a company with so much quality. As we'll soon discuss. Now, as I've already explained to you, Reklaim is a super growth company with a huge network effect. Moreover, privacy regulations are rapidly changing, thus creating a huge demand for compliant data, which is what Reklaim offers. So let's make a 10-year projection and play with these numbers. So let's say that Reklaim manages to grow at 15% per year for the next decade, okay? This would mean that Reklaim would get to 2034 here with around 20 million in revenue, which I think is totally possible. Actually, I think that's quite conservative, but let's try with that first. Now, what about our projected multiple? Well, as I've said, today Reklaim is trading at around 2 times sales. For me, that's a ridiculous multiple. For the quality of Reklaim's business, in my view, that's a very low valuation level. And I say that because first, this company has been growing tremendously. Besides, Reklaim has a huge network effect, is the first company of its kind, a marketplace of private data, and boasts an 80% gross margin, which is excellent. Moreover, this company, even being this small, is already profitable and already generates free cash flow, which is huge. And ultimately, Reklaim also doesn't have a lot of debt. And 90% of its revenue is recurring. So for a company with such qualities, a multiple of only 2 times sales, at least in my view, is just ridiculous. Companies like this are usually traded at much higher valuation levels. So for instance, I wouldn't be surprised at all if this company traded at about 5 times sales, okay? Actually, that would be still conservative in my view, but in this case, in a decade, Reklaim would generate for me a return of 900%, which would be equal to 26.1% per year, which is already excellent. Now, bringing the future fair price to present value using 10% as our discount rate, we would find 31 cents. So to reflect these assumptions here, a 15% projected growth rate and a 5 times price to sales multiple, so to reflect these assumptions here, Reklaim's stock price would need to be at 31 cents today. And again, this is not investment advice, okay? But it seems that this stock would need to go up almost 300% to reflect these premises, these expectations. The thing is that I think that Reklaim might deliver much better numbers than these. So let's say that instead of growing only 15% per year on average, Reklaim grows at 25%, okay? In this case, in 10 years, we would be looking at a return of 22x. Besides, Reklaim would get to 2034 with 44 million Canadian in revenue, which I still think is too conservative. But why? Why do I think that? Well, because, as we see here, the private data market is just huge, being estimated at $500 billion today. Now, let's say this number is wrong, okay? Instead, let's say that the private data market size is just 100 billion. So if Reklaim manages to capture only 0.1% of that, that would lead its revenue to 100 million Canadian. So that's why I think that 44 million Canadian in a decade is still too conservative. So with that in mind, what would happen to Reklaim if this company grew at, let's say, 35% per year on average for the next decade? So in this case, Reklaim would get to 2034 with 95 million Canadian in revenue, which I think is totally possible. Besides, we would be looking at a total return of 50x, and even so, even if that happened, Reklaim would still be a small cap with a market cap of approximately 500 million Canadian. So it would still have a lot of room to grow. So that's the kind of upside we have in Reklaim, and that's why I decided to buy more Reklaim shares. Now, I'm not saying that this will happen, I'm just saying that this can happen, that this is possible. Now, the good thing here is that I don't need this to happen to make money. I don't need the company to deliver a 35% annual growth rate on average for the next decade to make money, because I'm buying this company priced at such low expectations that even if it delivers a 10% annual growth rate on average for the next decade, I can still make money, as we see here. In this case, I would have a total return of 550%, which would be great already. In any case, I feel pretty comfortable buying Reklaim at the current levels. For me, this stock is really a bargain. Now, as always, nothing in this video was investment advice, okay? And well, that's it for today, and see you next time.